Hi, my name is Karen. This is my colleague Nuno. We were both mortgage agents here at MonsterMortgage.ca, and today we'll be discussing the 10-year fixed rate mortgage, which has been a hot topic of conversation over the past several weeks. Nuno, do you want to talk about this a little more?
Absolutely. The actual 10-year product has gained a lot of traction with our clients. Ultimately, it offers clients rate security over a 10-year period, which again is a pretty great thing to have. On top of that, the spread between the 5-year product and the 10-year product has really closed down, which again makes it very difficult to choose between a 5 and a 10-year product. But for anybody who's looking to choose a 5-year product, you got to look down the line 5 years from now when you come up for renewal, and rates are probably and more likely to be higher than the 4.2 threshold, which is really the break-even point for the 10-year product. Ultimately, it makes the client's decision that much harder, because unless you expect rates to continue to be low, then the 10-year product makes sense to take now, because again, it gives you that rate security, it allows you to know what your cash flow is going to be for the next 10 years. But you know what, let's talk about some questions that consumers have. I believe I'll let you ask the first one here from Daniel.
Okay, so the first question comes from Daniel, who's in Milton, Ontario. And he writes, "My financial advisor has warned me about the mortgage products making news lately. He says these products do not allow any flexibility and have many costly penalties. Does the 10-year product have these restrictions?"
Actually, they don't. A lot of the products that came out in the past were very restrictive in terms of what they allowed you to do. Some would only allow you to get out of the product if you sold the property. These aren't in the actual 10-year products that are being offered by the lending institutions. Ultimately, they have very good prepayment options, which again offers clients a lot of flexibility. Again, lump sums are raised between 20 to 25%, which can be applied at any time. There's also portability in all these products, which means that you can bring this product from your current residence to another residence which you may be upgrading or downgrading in the future. So the flexibility is definitely there. Nothing like the products we saw in the past. The next question, and this one we'll give to Karen here, is from Larissa from Mississauga, Ontario. "I've recently started a family and I've got to make sure my budget is in check. Is a 10-year right for me?"
Actually, this is a perfect product for somebody who is on a budget to take. And the reason is that you have control of knowing what your payments are going to be for the next 10 years. There's no fluctuations that you have to worry about, such as somebody who has a variable rate mortgage option. And the nice thing about this is that we don't have to worry about what might be happening in economies overseas, specifically what's happening in Europe and how that might impact the interest rates in Canada. So for somebody who's on a budget, I think that knowing what your payments are going to be for 10 years makes absolute sense. So this is the perfect product. And at the end of their 10-year term, the nice thing is that the mortgage balance that they have will be significantly smaller. So the interest rate will have a less of an impact than somebody else who might be considering a different rate today. So again, the 10-year fixed rate for somebody who is on a budget makes absolute sense, and it is the right product for them.
Absolutely, and that is completely correct. I agree with everything that Karen said. So again, keep your questions coming. If you're looking to apply, go onto our website, hit the apply now, and we'll be happy to help you.